Hello and welcome to Market Domination. I'm Julie Hyman. That's Josh Lipton, live from our New York City headquarters. We are giving you the ultimate investing playbook to help tune out the noise and make the right moves for your money.
And here's your headline blitz, getting you up to speed 1 hour before the closing bell rings on Wall Street.
I don't think it's a bubble. I think it's a snowball. It just keeps growing and it keeps moving. So until further notice, at some point, I think things are going to level out and then we'll move into the next disruption, the next technology disruption. But for this cycle, for the next at least 5 years, I think Nvidia is going to keep cruising.
Anybody who gets out of Bitcoin right now is making a mistake. I think it's one of those things where you can go considerably higher if you just look at what's happened before. And to your point, the ETFs are an easy way for a broad range of retail investors to come into the assets.
A lot of home buyers are coming off of the sidelines now. The number of people who are contacting Redfin agents for tours is up about 20% year over year right now. And it's at the highest level that it's been at since August of 2023. So if this really filters down through into sales, we should be seeing more of a pickup in home sales through the end of the year and into next year.
We got 1 hour to go until the market close, so let's take a look at what's going on in the markets here today. We have a surge, particularly in the Dow today, up 1.25%, about 544 points here. We've got the S&P 500 up 0.7%. The Nasdaq, the laggard here, just up about 0.5%. And for the reasons why, let's go to the Nasdaq 100 heat map, shall we? Because there's a big dark red mark on the middle of that Nasdaq 100 chart today, and that's Google, which is down 5%. On more news from the Justice Department.
Yeah, and then you saw analysts kind of weighing in today, Julie, and basically asking a lot of questions that you don't have answers to, right? So these remedies, would they be approved by the court? If they were approved, then you would have a separate fight. Would they actually survive then an appeals challenge? I mean, you just have big questions, a lot of uncertainties if you're an investor that you now have to live with in this name.
Yeah, and most analysts also saying that what the Justice Department has proposed, that is some kind of split of Chrome, maybe even Android down the line, is more than was expected. Now, then the other biggie that you got here, of course, is Nvidia. Nvidia shares were lower for a lot of the session until call it a little more than an hour ago when they turned positive. We're going to talk to a guest a little bit later about what's going on here. Really, it's a supply-demand issue, it seems like, with the company's new Blackwell chips and questions around production.
And frankly, that you run screaming into that print, up like 190% year to date, and you're tacking on more gains today. I mean, I think if you're an NVIDIA investor, you got to see that as a win.
I would think so, depending where you got in, but really anywhere you got in before today. And then finally, let's also look at what's going on with crypto, because Bitcoin up another 4% today and approaching 98,000, creeping ever closer to that 100,000 bogey that a lot of folks have talked about. You know, when I talked to Mike Novogratz of Galaxy Digital the other day, he said, we don't have far to go before you get to 100,000. He said you could see a washout. Maybe it happens next year, but that 100,000 probably go there first.
Yeah, I mean,
before anything like that happens.
This hope continues to run high about the incoming Trump administration, that how crypto-friendly they'll be, that it's not just Trump, of course. I mean, he has surrounded himself with a lot of crypto fans. I mean, Howard Lutnick is a fan, and RFK Jr. is a fan, right? So you do have allies. The question, of course, what kind of policies, after making a lot of pledges on the campaign trail, do we really see?
Yes, well, we have a breaking news story today that is directly related to that, so let's get to it. Securities and Exchange Chairman Gary Gensler making it official he will step down from the post on January 20th, 2025. That move was widely expected. It does pave the way now for President-elect Trump to immediately replace Gensler. Technically, he could have stayed on the job until 2026. Trump is likely to announce a pick that's much friendlier to the crypto community, which has helped support the rally in Bitcoin. The anticipation of this pick. This is really what the crypto community has zeroed in on as the most important pick, because Gensler was seen as an opponent of
an antagonist
of the more broad adoption of Bitcoin, and was seen as somebody who would put curbs on that adoption.
Yeah, I mean, not surprising, of course. I mean, we mentioned when Trump was on the campaign trail, Julie. I mean, he made his views known on Gensler, fairly clear, right? You didn't see it. And Gensler, to your point, I mean, you think about his tenure, it was a lot of headlines of big fights and big clashes with heavy hitters in this industry, big names. You think of Coinbase. Now, of course, attention turns to who's going to take that big chair. And it's not just that. I thought it was interesting. We had other reports say this kind of idea of a new crypto czar maybe gaining some steam. Even a report, they're kind of discussing candidates. Chris Giancarlo is a name that's being floated. He, of course, was Trump's first CFTC chair. So interesting how it's all kind of flushing out slowly.
It is, and none of that is proving to be any kind of obstacle, of course. Quite the opposite for Bitcoin prices.
Yep. Yeah. Well, let's drill down more into this because Bitcoin is hovering near 98,000 now as the Security and Exchange Commission announces Chair Gensler is going to step down in January. Here with more is Sean Farrell, Fundstrat Global Advisors, Head of Digital Asset Strategy. Sean, let's just start with that headline. I mean, obviously you're not surprised about Gensler leaving, but tell us what you make of that news and any pick, Sean, of who you think could be stepping into that seat.
Hey guys, thanks for having me. Yeah, so I don't really have a short list of candidates just yet. I think, there are two ways to look at the regulatory shift that we've seen over the past few weeks. Obviously, is ongoing, and portfolios are currently adjusting to this new world. There is a world in which we get an actively pro-crypto regulatory apparatus, but I'm not sure we should discount the effect of merely removing a lot of these crypto antagonists from the regulatory backdrop. So just having Gensler out of here and getting someone that, even if they are not actively pro crypto, but just pro deferring that which is responsible, that which the legislature is responsible for to the legislature, and doing your job as the SEC, I think that presents huge upside for the crypto space and for capital markets in general, frankly.
Sean, pretty much everyone we've talked to within crypto talks about a change in the regulatory regime as being an unequivocal good, right? I wonder, though, what are the risks still that remain around trading crypto, but not just trading crypto. I mean, we have seen obviously bad actors like an FTX, right? And that blow up and the effect that that had on the system and on individual investors. So do you think that there's a risk of the pendulum swinging too far and getting rid of some protections for consumers and investors that should be in place?
Yeah, well, I mean, FTX happened, for a number of reasons, I guess, but one of them is, the lack of diligence and lack of willingness for, our regulatory bodies and for Congress to actually promote sound regulation for these novel crypto assets. And, that forced a lot of traders and investors to this, offshore exchange that did not have the oversight that they would otherwise have if we had a, sound regulatory framework here in the U.S. So I'm not sure, obviously, FTX and all of the perpetrators at FTX are the criminals here, but I'm not sure that the SEC and Congress at all should escape all of the blame.
Sean, let me ask you, in this short move since Election Day, do we have any line of sight of who's been buying here, Sean? I mean, is it individuals, is it RIAs, is it institutions, some combination?
Everybody. Yeah, look, there's been a lot of clamoring over the past couple of weeks about whether we're nearing a market top, whether things are getting frothy, and sure, there are areas of the market that are getting a little spicy, but frankly, spot demand has been pretty consistent and very strong. Obviously, you have Michael Saylor that's been in the market. He's issued about $6 billion in equity over the past few weeks and just raised a 0% interest convertible note. He raised $2.6 billion in additional dry powder. Well, I guess he's in the process of closing that. That'll probably hit the tape over the next couple of days. But that has certainly supported the spot market. Actually, if you notice, we did have a few days in which risk more broadly rolled over and Bitcoin really didn't budge. And I think, I think him being present in the spot market has, helped bridge from, very sound conditions for Bitcoin to now, which I think are sound macro conditions once again for Bitcoin.
Sean, I really enjoyed your recent note looking at whether the movement is getting a little toppy in Bitcoin. So I'm curious how far you think it's going to run. I believe that your near-term target is 115, if I'm not mistaken. One of the things that you're looking at for signs of that froth is the so-called kimchi premium, right? Which I love the name of that indicator, which looks at how Bitcoin trades in South Korea and on those exchanges versus what we see in the US. So sorry, I know there's a bunch of questions in there. So I guess what's your target, and walk us through that kimchi premium?
Yeah, so I think we still probably tag that 115, maybe 115, 120. So there's still some incremental upside here through year end, in my view. And in terms of metrics that we look at for top signals, there are many, and I think the long and short of what we look at is how much leverage is in the markets relative to spot demand and USD inflows into the crypto economy. And we look for areas of retail speculation. And, some metrics are, we can draw direct causality. Others are more correlative. I think this kimchi premium certainly falls more in that correlative bucket. But if you look at just some background, I guess it's worth mentioning why this exists. There are certain capital controls in South Korea that do not allow for differences in price on Korean exchanges to be arbed away, and therefore you can get severe deviations, especially during speculative periods of any market cycle, where the price of Bitcoin on Korean exchanges is, sometimes 5, 10, 15, up to 50% higher than it is, say, on Coinbase or Binance. And look, Bitcoin is a global asset. Crypto is a global asset class, and you need to look everywhere for signs of market froth. And I think that has been a very dependable metric. And I guess just around things come back around to what we're seeing there is that this metric is currently around 0. So that to me is certainly it's a good metric that provides some confidence around a lack of market froth right now.
Sean, in terms of risks to think about for Bitcoin going forward, there was an argument I heard, I just want to get your take on it, I thought it was interesting, which is what if Elon Musk and Vivek Ramaswamy are actually, with this Department of Government Efficiency, actually, do take a bite out of government waste and efficiency, and maybe they do bring, debt to GDP closer to something that at least looks a little less scary. Would that be a headwind for Bitcoin? Your thoughts on that?
Well, it depends on how much we're spending, right? So I think this was the first election in which there was no debate on any stage about bringing the budget into balance. Normally, that's been a topic of conversation, even though there's never been a politician that follows through on that. So I think if you're looking at risk asymmetries as it pertains to the trajectory of fiscal deficits and the budget, it seems like you're better off betting on either the fiscal deficit remaining where it is or continuing to expand. That being said, yeah, absolutely on the margin, if we were to cut spending or cut some waste, I guess, it's certainly on the margin would likely be a headwind for liquidity sensitive assets, Bitcoin included.
Yeah, but to your point about how difficult it could be, I saw a figure today that even if you cut a quarter of the workforce on the federal level, it would be 1% of that budget. So Sean,
yeah. I mean, people don't understand like 90% of the budget is, and now look, there's a lot of fraud you can kind of do away with in these buckets, but it's defense, healthcare, stuff that it's tough to really bring in spending when it comes to those two. But they're both seemingly talented, bright individuals. We'll see what they can do.
We shall. All right. Thanks a lot, Sean. Appreciate it.
Thanks.
For more on what the latest moves in crypto mean for the broader market moving forward, we want to welcome in Ben Emmons, FedWatch Advisors founder and chief investment officer. Ben, it's good to see you. So here we were talking about Bitcoin and crypto more broadly there with Sean Farrell. He's got that 115, 120 target that he thinks we could get to in the sort of near to medium term. How are you seeing the interplay between Bitcoin and other assets? Are we seeing some of the money that's going into Bitcoin? Is it coming at the expense of anything else?
Hi, Julie. No, I don't think it actually is, because the flows into Bitcoin ETFs are big. It's something like 100 billion out of total AUM. So a lot of money moves in, but so have equity flows since the election. So that's kind of a parallel. And I think bond fund inflows are not really changed as much either. So it's in the liquidity environment we're currently in. And I think it's really driven by the election that is leading to these animal spirits once again revived, thinking of we're going to go into an economy that's going to be a lot of investment. And you were just talking about like this Doge, this cutting of the government, and then crowding out will be change and we get more investment. So you get all this animal spirits, leads to liquidity in the markets. And Bitcoin is very sensitive to that aspect, to liquidity. And I think that's the connection here for the broader markets. We may not be so much in an environment like 2021 when it was frothy, but this is more about we're going to potentially really go into a different environment next year with the economy, with faster growth and more liquidity. Then yes, Bitcoin should be trading at higher levels. So breaking 100,000 is quite likely here.
Ben, how do you think about what the appropriate role of Bitcoin is in somebody's portfolio?
There's a big debate because, on the one hand, it's an asset that's been, driven by speculation. There's a lot of confusion still. Is it the store of value or currency and that sort of thing? But at the end of the day, it is an asset that has performed exceptionally well. So from a diversification standpoint, something that performs really well, that obviously is really the right way to diversify, right? It would be different if it has a lot of drawdowns very, very frequently. Now, it does have that. I want to emphasize it. It's not in volatility. It's not an asset that doesn't have any volatility. But we also have to be mindful of that. It's a separate alternative asset. So it plays a clear role now in asset allocation. People want to own it. And as a result, it's going to be a good diversification.
Ben, I know you've also been watching the relationship between Bitcoin and other assets. You're looking at, for example, the Bitcoin to dollar ratio versus the 10-year yield. What are your conclusions, I guess, when you look at that chart?
Yeah, so there's an interesting sort of correlation here that it seems that each time that ratio goes up, which means that Bitcoin is really outperforming the dollar, that we're in an environment of where there's a lot of liquidity in markets. There's a lot of optimism and spirit. There's also an economy that shows acceleration, whether that was back then in 2016, 17, or back out of the pandemic, right, in 2020, 21. And now we currently have, and that does drive to higher interest rates, higher yields. So there's a bit of connection there. But it's also interesting to look at that ratio compared to the copper gold ratio that people have sometimes looked at, making a direction interest rates going down. So I think this is really an indicator of rates going higher, because Bitcoin, I think, ultimately is really an asset of, on the one hand, maybe, I guess, pure speculation, but really because people are very optimistic, enthusiastic about the outlook, and therefore willing to buy Bitcoin as an asset.
Ben, we're still waiting for who President-elect Trump is going to nominate for Treasury Secretary, different names being floated out there, Bessent, Warsh, Mark Rowan. How do you think about those possible candidates, Ben, and in terms of how they might impact crypto?
Yeah, they all have different views on it, right? I once watched an interview with Mark Rowan. He was quite negative on crypto, whereas the others have sort of a mixed view on it. But I think in this particular situation is that this next Treasury Secretary likely would have to take a very different view on crypto than Janet Yellen did. She was very outspoken. It was a speculative asset and had not much meaning. If this crypto czar is being put in place, there will be clearly a relationship between that person and the Treasury. Treasury ultimately is about the dollar policy. So I thought of it more like it may become like this crypto, strong crypto policy, like the strong dollar policy from the 90s. If Trump is serious about making it a crypto reserve, just like we have the exchange rate reserve for the dollar. And I think that's where the real link is. And I would think that a person like Kevin Warsh or Scott Bessent would be very pro-crypto for that matter. And linking that to the fact that you have an asset that people want to buy because they're so optimistic about the economy, and that's the message they want to bring out, obviously, to the public.
Well, we'll see how it all shakes out. Ben, good to see you. Thanks a lot.
Thank you, Julie. Thank you.
We're just getting started here on Market Domination. Coming up, shares of Nvidia are higher following the latest earnings report. We're going to speak to an analyst on the other side about what is next for the tech giant. Plus, BJs Wholesale Club did something for the first time in 7 years that has investors buzzing and the stock jumping. We'll tell you what it is later in the hour. Stick around, much more Market Domination still to come. Let's check in on our top trending ticker today. You can scan the QR code below to check out the best and worst performing stocks of the session on Yahoo Finance's trending tickers page. We're talking about shares of Alphabet. The stock is sliding as the Justice Department is calling for Google to divest its Chrome browser. This is part of the government's investigation into the company and what it says are sort of anti-competitive practices here. Now, the Justice Department is calling for this, does have to convince a judge that this is the right way forward. Alphabet is, of course, going to appeal this and fight this. So it's unclear when this would happen, if anything does end up happening in the end. But investors are still concerned here, which is a little bit unusual, Josh, given what we've seen on the on this kind of antitrust front as of late.
Well, yeah, and the uncertainty playing a role there. In terms of what comes next, timeline, apparently company will have the chance to submit its own views next month. Got a planned 2-week hearing coming in April. Of course, then how the incoming Trump administration, as we've discussed, responds and reacts is another consideration, Julie. Mark Mahaney over at Evercore, friend of the show, all around very smart man, tells his clients our quick checks with legal experts suggest a near-term negotiated settlement is unlikely, and that the case could continue to act as an overhang on Google shares until we receive a final judgment on remedies, likely, Mahaney says, August 2025.
Yeah, so that's a pretty long overhang.
It sure is.
Yeah, although sometimes these things do drag out for years, so at least it's not years, I suppose.
We'll see.
On the bright side, we'll get some sort of resolution here. There's also some reporting, by the way, that as part of this, Google would also have to divest of its stake in Anthropic, the AI startup. So there's all kinds of potential outcomes that could come.
A lot of moving parts in the shares.
Definitely.
Moving on, Nvidia, there's another big name, handily topping earnings estimates for the third quarter, reporting an eye-watering 94% revenue increase year over year. Data center revenue also came up 112% year over year as Nvidia continues raking in profits from hyperscalers. Investors are wondering how long the growth will continue, with questions around Blackwell chips still hanging over Nvidia. For more, we're bringing in Patrick Moorhead, founder, CEO, and chief analyst at More Insights and Strategy. Patrick, always great to have you on the show. So listen, it's the first time we've had the chance to catch up since that Nvidia print, Patrick. You know, I was talking to Julie at the top of the show. I think if you run hot into a print up 190% year to date, the next day, if you tack on another 1.5% on top of that, Patrick, to me, that you're in the shares, that's a win. But how did you see this print, Patrick? Give us your take.
I mean, across every single number you can look at, it was a win. I mean, had a triple beat. But the challenge with this and the opportunity is investors want more. Right. And as we can see, the ebbs and the flows throughout the day and the after hours, they were looking for an absolute knockout blow. Now, when you combine that with some of the questions about Blackwell availability, these rumored heating issues, looking at the gross margins, that just kind of added to the uncertainty. But I mean, it was a beautiful print any way that you shape it.
Patrick, you understand these issues really well. So help our viewers understand, where are the sort of pain points? Where is the tension in making enough of these Blackwell chips to get out the door and meet the demand?
Yeah, so NVIDIA's largest supplier, right? There's wafers and there's packaging, okay? Wafers are the chips or end up becoming the chips, and then you have to put them in a package to do what they do. And TSMC is maxed out on the amount of wafers that they can produce on their leading edge. And they have a monthly report where they have consistently said, we are sold out, we are adding capacity, but it takes years to add more capacity. A different type of capacity challenge has come out over the last 2 years, and that is in these packages. And for those who are following along, it's called CoWoS, which is a special type of package. And you have to build entire factories just to do the packaging. So the wafer has to connect with the packaging to ultimately get the cards out and to get those racks out. As we've seen in chip world, it takes years. You had to have had invested years before to make sure that you are ready for today.
Let me ask you about, so that's the supply side. On the demand side, I want to get your thoughts as well. Big tech is spending. How long do you see that continuing, Patrick? You know, is it 12 months? Is it 18 months? What's the timeline? And what happens after that?
So I have confidence that for the next 18 months, the likes of Meta, Amazon, Google, and Microsoft, and the tier 2 cloud service providers will continue to gobble these up. And the primary reason is the fear of missing out. Every one of these companies is afraid of missing out, but they also see on the plus side the opportunity, maybe the opportunity to apply copilots to enterprise SaaS, which potentially impacts these enterprise software companies, the ability for consumer companies to be able to either lock in the lead that they have or make more money on advanced services. And until investors start crying foul on CapEx, and I don't think that's going to happen until one of these hyperscalers starts to have profitability challenges, this is going to go on for at least 18 months. Interesting conversation I had with NVIDIA CFO Colette Kress. I asked her, well, how long does this go? And this was not just the hyperscalers, but, and I'm paraphrasing, this could go on for a decade. And thought she had a good example. She talked about client server, right? That was the big wave after mainframe and mini computers that literally lasted for 10 years.
What about the opportunity, though, that, or I guess the risk for NVIDIA, that some of these other companies are going to step into the breach here? Now, I know you just talked about how complicated and how long the lead times are to even, build this stuff in the first place.
Right.
But the longer it takes to get Blackwell chips out the door, surely that risk must increase.
So it does, but with all the wafers taken, and for what it's worth, it's not just NVIDIA who has these wafers. They're in competition with Apple, Qualcomm, AMD, even companies like Google and Amazon and Microsoft who have their own AI inference accelerators. And every time we talk about, I look at the competitive environment. NVIDIA on a percentage basis will lose market share to the likes of AMD, Intel, and even the hyperscalers in-house pieces of silicon. Now I'm going to asterisk with that and say, even if they lose percentage market share, they still have a tremendous amount of upside growth. What I know for certain is no industry is comfortable with any vendor having 95% market share of anything over an extended period of time, and that will change.
Patrick, get you out of here on this. Incoming Trump administration, Patrick, what do you see there? Is that a potential impact for NVIDIA and possible impact for just the broader semi-space you know so well?
Yeah, so a lot of people don't know this, but the first Trump administration kicked off a project which led to the CHIPS Act, which the Biden administration got over the line. We still haven't written the checks yet, which is an issue that continues. But I think with all the bluster that Trump has put out there, if I look at his first administration, he was saying the same things. But in the end, it's all about a negotiation and getting the United States a better deal. I do believe that both TSMC and Samsung will need to invest more of their own money into the United States to be able to build more factories. Otherwise, I could see tariffs down the line, which would negatively impact pretty much all of tech.
Patrick, always great to have you on the show. Thank you, sir.
Thank you.
And coming up, OKLO is in the hot seat as Carousel Capital says it's shorting that stock. We're going to speak to one of the analysts behind that call when market domination returns. All right, now time for some of today's trending tickers. You can scan the QR code below to check out the best and worst performing stocks of the session on Yahoo Finance's trending tickers page. Shares of Temu owner PDD Holdings are slumping here today. The company reporting its slowest quarterly revenue growth in more than 2 years. Says its profitability is going to trend downward, Julie. They talk about more competition in China. And I think here's the line from execs here. We will see greater financial impact as we will be disadvantaged, they say, against our competitors for some time to come. They add our team of staff is now limited by their past experience and suffers from a lack of certain capabilities. So points for honesty.
Yeah, I guess so. Bloomberg Intelligence points out that this is the first miss on adjusted operating profit in 7 quarters. So that's worth noting as well. The stock is down already year to date. Even going into the print was down something like 20%. And then we're seeing this further drop. And I thought the commentary from Alicia Yap over at Citi was interesting. She said the biggest discrepancy in the results versus expectations was the cost of revenue. She said that increased at a faster rate than overall sales growth. So that cost line is something to keep an eye on.
I saw other analysts calling out just rising competition here. They called out names Alibaba, Amazon, TikTok Shop, presenting what they said was real potential challenges to the company's just bottom line.
Right, and now Amazon just introduced that more direct competitor to something like Temu. All right, we're also looking at shares of BJs Wholesale Club. They're going very much in the opposite direction. They're surging. The retailer raising its earnings guidance and saying it would increase its annual membership fee for the first time in 7 years. That's effective on January 1st. So that really seems to be, yes, the numbers were good, but that seems to be the thing that is putting a little bit of juice under the stock. It was expected that they would increase that membership fee, but it's happening a little sooner than some analysts had anticipated.
Yeah, record high this morning, by the way,
look at that.
in today's trade. In terms of the fees here, it looks like club membership fee increases by $5 to $60 a year. Club Plus membership fee increases by $10 to $120 a year. And that's the same kind of commentary I saw, Julie, on the street was, okay, we knew this was coming, but it came a little quicker than we thought. They also did okay in terms of capital return news. At least you also got a new share buyback program as well. Always appreciated. Yeah,
so it's interesting when you look at the landscape of the Costco, the BJs, the Walmart, the Target. You have some clear winners and losers in this spending environment, which is interesting differentiation.
For sure. All right, let's move on here. OKLO in the hot seat. That's as Carisdale Capital says it is now shorting the stock. The nuclear energy company has seen shares skyrocket amid enthusiasm over nuclear to power AI data centers. However, Carisdale claiming that virtually every aspect of OKLO's investment case warrants skepticism. Sam Andraghi, founder and chief investment officer of Carisdale Capital Management, joins us here with more. Sam, it is good to have you on the show. So you're coming out shorting a well-known name here, Sam. How come? Lay out the case for us.
Sure. I mean, OKLO's sort of basically become a way to play the hype for the nuclear renaissance that we're going to see over the next few decades. And it's been fueled by, the power needs from AI data centers. But I think what investors don't realize is that this is going to take a long time to play out, and that OKLO will not be building any plants anytime soon. And a major issue, it continues to be the unit economics and the costs. For the next decade, it's going to be natural gas power plants that are going to be the go-to for fueling these power needs of the AI data centers. It's not going to be OKLO. And then within the competitive landscape of small modular reactors, we think OKLO's a laggard. It's behind Kairos, it's behind X Energy that have signed up contracts with Google and AWS. But I think just for all of these guys, the economics just don't make any sense. And then the regular timeline is going to take much longer than the market believes.
I just want to play for you a comment that we got from the OKLO CEO, Jake DeWitt, in particular about costs and about the timeline of what they're working on. So here's what he had to say on cost.
We continued to execute well with pretty significant capital efficiency. When you look at the nuclear space, typically things spend a lot of money, and that's kind of the normal part of the founding thesis we had at OKLO is you don't have to do that. Nuclear does not have to be costly and expensive in those ways, and we're validating that, right? Having about 1/5 the cash out the door compared to our competitors and making significant progress.
So I'm just curious on your reaction to that, where he talks about this lower cost model, certainly low cost in comparison to traditional nuclear, I suppose, but he also talks about it being lower cost than competitors.
They don't have costs going out the door because they haven't built anything or gotten really any close to that. In sort of unprecedented fashion in 2022, their license application was denied. I mean, this is a company with less than 100 employees versus the 500 of X-Energy and Kairos. And, from all the experts that we spoke with, the way that they went about their license application was, just very deficient. They didn't answer questions. They just got nowhere close to building a prototype that would help the regulators and commissioners get comfortable that these small modular reactors are going to work, are going to be viable. And so that's not even accounting for the cost issues that we've talked about. They're just nowhere close to building anything. And one of our criticisms of the management team here is it's a very academic management team with a lack of real world experience. And so ultimately, I mean, this is not a software company. They have to build power plants, and they just don't have that expertise. And the technology is very unproven. This is just going to take a very long time.
Sam, I'm just curious, in terms of personality question, there are some big names, behind OKLO, Sam. I mean, obviously you know this. I mean, Sam Altman and Peter Thiel, board member, of course, Chris Wright, who was Trump's pick to lead the energy department. Did that ever, I'm just curious, Sam, did that ever make you think twice before shorting the name?
A lot of the names we short, we're going up against billionaires, we're going up against big names. And what we see, and we've been doing this for 15 years, we've done more than 100 short activism campaigns, is that you just see situations where market participants think that just because there's some famous investor or some famous person or some rich person involved in some company, that the company is economically viable, commercially viable, the technology works. And that's not always necessarily true. In fact, many times it's not true, and those are where we get some of our best shorts. I think in most of the shorts that you look at that we've done, we're always going up against some billionaire, and our track record, I think speaks for itself.
Sam, really appreciate you taking on the time to come on the show and make the case for us. Thank you.
Absolutely. Thanks for having me, guys.
And coming up, we're taking a look at the best ways to be positioned in the defensive sector in today's Investor Playbook. Stick around, much more market domination still to come. All right, time now for some calls of the day. Salesforce getting some encouraging sentiment on its AI-driven product cycle. Stifel seeing Salesforce well-positioned to be an AI winner. So let's start with that, because that was a bullish note. They say Stifel says they spoke with Salesforce partners. Commentary leaned positive around product development, future growth, cautiously optimistic that the macro stabilization will continue. Driven by product innovation. Bottom line, listen, they maintained the buy. They told their clients, we're taking our target to 390, and here was the money line. They say, Salesforce is our top large cap application software pick, well-positioned, Stifel says, to be an AI winner.
Interesting here, because you also have this note from TD Cowen.
Not as enthusiastic.
Not as enthusiastic, but they did raise their price target,
yes.
And they raised it to 340 from 290. Both of them, what both of them like is Agentforce, which is the sort of new product suite from Salesforce that incorporates AI in what it does. So both of them seem pretty enthusiastic about that particular aspect. We should note that this is coming ahead of the company's third quarter report, which is going to be December 3rd, and the shares are up about 28-29% this year going into that report. So there is, this sort of surge of enthusiasm. TD says it doesn't have much more to go. Obviously, Stifel is saying it does.
Yeah, TD said checks on second half trends. They told clients upticking, but still some pockets of caution, they said.
Yes, well,
that'll do it.
All right, let's also take a look at Amentum Holdings. Those shares are surging. Raymond James initiating coverage on the stock with an outperform rating. Now, Amentum might be a new name to you. That's because it's a new name, period. It's a spin-off from Jacobs Engineering. It's a government and commercial services contractor. Raymond James saying folks should take a look at this as a buy, that it has a large, thematically appealing total addressable market. The price target there, $30.
Yeah, it goes on to say, Raymond James telling their clients, the company's undercovered, undervalued. It's trading a discount to government service peers that have re-rated high over the past 2 years. Provides, they say, one of the more compelling entry points in the space. Their target is set at 30.
Yeah, maybe undercovered because people didn't know this had happened. It's in the S&P 500.
They do now.
Fun fact.
They do now.
Yes, they do. All right, with ongoing geopolitical tensions around the world and the Republican Party set to assume control of the federal government in January, the defense sector set to potentially be a winner in 2025, which is a few minutes left till the closing bell on Wall Street. We're looking at how to play defense stocks with the Yahoo Finance Playbook. Joining us now, Tony Bancroft is back with us, Gabelli Funds Portfolio Manager of Aerospace and Defense. Tony, it's great to see you. So let's look at the big picture here, first of all, because it's a little bit confusing for lay people, perhaps, who are not as steeped in defense as you are. We've got an incoming administration that, maybe will be sort of robust on the military, but on the flip side, wants to cut spending and also wants to perhaps pull the U.S. back from some of the big conflicts in the world. So how are you thinking about those big issues?
Yeah, it's great to be here, Julie. I'd say overall, the U.S. And the new administration probably still wants to be, wants to retain its stature as the world superpower, and it sees China as the near peer threat, right? Sort of the upcoming threat, and there's going to be a push to pivot back to the Pacific, and the only way we really can do that is we really need to rebuild our defense base. The Pacific's much larger. It needs longer range weapon systems, longer range aircraft, more ships, more submarines. And I think the new administration realizes that. And I know that there's been a lot of discussion with the DOGE and cutting costs, federal spending. But I think, the industry is a relatively an oligopoly. There's some major large primes. And I don't think they want to go through sort of what Boeing has been through in its defense business, where it had some essentially negotiation failures with the federal government in some of their defense contracts. And the industry has explicitly said that, where they're not going to get caught probably in that situation again. So I think there's going to be definitely friction, and there's going to be negotiations on both sides. But I think the defense industry will probably do well in the long run. There's going to be a need for more spending. I mean, as you're seeing, there's a lot of geopolitical tension right now, and I don't think that's ending anytime soon. And on top of that, defense spending is still at a relative historic low in post-World War II spending, where historically it's been about 6% of GDP, and right now it's only about 3.5% of GDP. And on top of that, NATO is still not spending at its 2% of GDP target. So that's another 44 billion of spending increase that we could see. So I think that's sort of where we're looking, and that's why our fund, the Gabelli Commercial Aerospace and Defense GCAD ticker ETF, looks to invest in this area.
Tony, let's dig into some names in the area too. You mentioned Boeing. I mean, it's been a wild year, Tony. The stock's down about 45%, year to date. But if I recall, Tony, you're a fan of that name, correct?
Yes, Josh. It's one of our largest holdings in our fund, and it's essentially a turnaround story. I think most of the bad news of what's happened in the year, starting in January with the door plug, and all the way up to the strike that just ended, about 2 weeks ago with a negotiation, new contract negotiation. I think that is sort of behind us, and now you see CEO Orford, having all hands on deck meeting yesterday, and essentially telling the Boeing team that they got to start moving forward, and they can make some big changes here that will make a big impact. And it's not going to be one silver bullet. It's going to take time to recover from what they've been through. But let's look at the numbers here. There's essentially 45,000 plane demand for delivery over the next 20 years. It's a duopoly. There's Airbus and Boeing, and they essentially have about a 10-year backlog with growing demand that actually grew in the worst cycle of downturn in air travel in the history of the industry with COVID. And you still see customers that lost orders and have been delayed orders still making orders with Boeing. So I think in the long run, Boeing will get back to profitability, and we'll see them flying high.
Given that you are positive on the space broadly, I was surprised as I was looking through some of your picks that you think are well positioned by what wasn't on the list. Big government contractors like Northrop Grumman or Lockheed Martin, Raytheon, not on the list. And I'm curious why, Tony.
Actually, we like those as well. I was sort of trying to give you some of our largest positions, larger positions, and maybe companies that we see catalysts. For example, obviously Honeywell, which is a larger, defense contractor and commercial aerospace provider. We see activist Elliott Management stepping in and taking a $5 billion position and saying, hey, this doesn't make sense having these two, this aerospace business and this automation, these automation strategy together. There's not a lot of overlap, and we see that something like a GE, which they've just pulled off and have had wild success from that. We see potential for this to be the case. So companies like that, obviously companies like Textron, where they have the contract for the largest aerospace defense contract after the F-35 to rebuild essentially the replacement for the Black Hawk helicopter, which essentially just doesn't have the legs to operate in the Pacific as the U.S. looks to head that way. And other companies that we like L3Harris, which is a prime, but great exposure to where the growth in the defense budget is going to be in ISR, space, hypersonics, undersea. They've got a lot of opportunities and advantages where they operate in that space. And then going back to some of the smaller companies that we see, financial engineering and M&A potential companies like Triumph, which has been reported, has been speculated that they're looking for a buyer, amongst others. So there's a lot of opportunities in the space, and we have a positive view in the long term.
Tony, always appreciate your time in those stock picks. Thanks for coming on.
Great, thanks so much.
And while we're wrapping up today's Market Domination, don't go anywhere. We've got you covered with all the action following the closing bell. Stay tuned for Market Domination Overtime.
There's the closing bell on Wall Street, and now it is market domination overtime. We're joined by Jared Blickery to get you up to speed on the action from today's session. Let's start with the major averages here, finishing near the highs of the session, with the Dow up about 462 points, a little better than 1% here. The S&P 500 up 0.5%, and the Nasdaq Composite not doing as well, held back in part by Alphabet, which of course we learned the Department of Justice would like the company, or is trying to force the company to sell off its Chrome or spin off its Chrome division. Whether that will actually happen, still in question, but nonetheless, that stock under pressure. And then as we look across some of the other things of note here today, the Russell 2000 outperforming in pretty decided fashion, up by 1.8%. We have had a lot of folks come on the show and talk about liking small caps here into the end of the year. Interesting that move in small caps comes even as we see a little bit of a tick up in yields, which has not been the case consistently. And then we got to talk about Bitcoin, right? Bitcoin rising above 98,000 here as we got the news that Gary Gensler is indeed going to step down as head of the Securities and Exchange Commission. He is seen as sort of one of the main antagonists for the crypto industry, who has sort of held back its growth. So not a surprise that he's stepping down, but a confirmation, and now the crypto industry waits to see who could be appointed in his stead. Jared's got a closer look at today's action right now. Hey, Jared.
Thank you, Julie. Just wanted to point out the S&P 500 equal weight index also pretty strong today. So absent Alphabet and maybe a few others, it was a pretty broad-based rally today, and you can see that in the sector action. Only communication services, that is the Alphabet sector, that was down 28 basis points, but utilities up 1.75%, financials and industrials, materials, staples, tech, all of those up 1% or more. And we can see this if we take a look inside the Nasdaq 100. So you see the left there, mega caps not doing so well today, except for Nvidia, pretty close to that record high day after its earnings. Impressive that it's closing the day in the green here. But the right side, very much a green expression of the Nasdaq 100. Here are the semiconductors. We see Micron up over 4%. So is Lam Research, Applied Materials, and Marvell up over 3%. If we take a look at software, software has been flying recently. Aside from Microsoft, pretty green board there. We see IBM, Salesforce, each up more than 3%. Intuit up 4%. And if we take a look inside the ARC innovation components, well, we got some red there, but I'll do an equal weight so you can see there's actually a pretty good split between green and red. So Coinbase taking a little bit of a backseat, Roblox and Beam also down today, but Teladoc up 15%, Pinduoduo up 5%, and you get the picture here. I'm going to leave us with a picture of the Dow, and we can see similar story playing out with the mega caps, but for the most part, the right side more green than red. Josh.
Thank you, Jared. Stocks closing the day higher with strong gains. The Dow up more than 500 points. And it wasn't just big tech driving the gains either. We saw a bit of a rotation out of tech and into cyclicals. Joining us now is Alonzo Munoz, Hamilton Capital Partners partner and chief investment officer. Alonzo, it's good to see you. So another day in the green, Alonzo, right? And I think you look at this and say the economy looks resilient. Earnings growth looks decent. You know, Alonzo, the Fed might not be, tightening as much as the market thought just a few weeks ago, but it's not as though they're biased towards tightening either. I'm just curious what you make of it. I mean, that sounds like a lot of good news for bulls.
Yeah, great to see you guys. Happy Thursday. Thanks for having me. So there's, a lot of tailwinds for this market as we head into the end of the year. We're over those big drama events. And, we considered that to be the election, that first rate cut, earnings, obviously Nvidia yesterday with what we consider to be exceptional blowout earnings. And so, good tailwinds as we head into the end of the year, close out 2024. The market's up big this year across the board. I think I saw a report that just about every ETF out there has had a pretty good year. And so a lot of enthusiasm, a little bit of euphoria as we go into next year. But overall, we're upbeat. We're confident as we head into 2025. And I think there's tailwinds to support that.
What do you worry about?
Yeah, good question. That's a tough question. So as we look to next year, obviously with the new administration, I think tariffs and taxes are two big things that we're looking at from a policy standpoint that could maybe eat into margins or have an effect on momentum in the market, but also fixed income. We've seen yields really push higher. The 10-year, holy smokes, I think it was at 350 just a couple of months ago, and it's it seems like it was on its way to 5% at some point, and that could obviously have an impact on valuations as well. So there's some pockets of risk in the market. We saw, some data within the Beige Book that wasn't super encouraging, but overall the Fed is lowering rates. We expect another rate cut in December. Earnings have been, good. They've been resilient. There's a lot of spending, as you guys know, on AI. I heard in the show you guys talked about Nvidia and at depth. But there's some risk in the market. I think overall, though, as we head into the end of the year, we're pretty confident that we should have good outcomes.
So, Alonzo, if tariffs, are a potential worry, does that mean you're already starting to think about that? Are you avoiding certain sectors, certain names, or no, you don't know enough at this point?
Well, I don't think we know enough. We're staying the course right now. I think we want to see how this develops, and going into next year, obviously watching what some of the proposals are. I think some of what was said may have been posturing going into the election, maybe some hardball negotiation tactics. But again, we're not going to make any big decisions without more information for us to be a little bit more tactical and strategic.
Talk to me about how you're thinking about the Magnificent Seven, because there have definitely been some dings to that group as of late. I mean, just look at Alphabet today, for example. Even Nvidia sort of whipsawing around. Is that a collective that you still want to own here?
Well, for us it is, and we own them. I think we're going to continue to own them. I think what we're talking about with our investors and just investors in general is that the volatility is picking up. And even yesterday after the earnings, Nvidia was after market down 4, 5, 6%. It recovered overnight. This morning it opened lower, but amazingly it closed higher. And we're getting used to these bigger pockets of volatility or these bigger swings within these mega cap names. But the earnings were great. I think that was a big worry for us, was really peeking through the earnings and analyzing these companies at the fundamental level to see if they were still delivering on that growth mandate. And a lot of them are. And I think we talk a lot about this AI narrative and the AI wave, and we're still in those, what we think to be those initial innings of this tech revolution.
What about Alphabet, Alonzo? Obviously in the news today with the DOJ, and it seemed like some investors got nervous, but you still like that name here.
We do. We own it, and I read the report this morning. It looks like the government's throwing a big blanket to see what they could capture here, in terms of punishing Google. And we looked at things like their Chrome, the Android, blocking their investments in search, specifically their AI investments. And we just don't think that's the case. I think obviously Google is going to fight this, or Alphabet's going to fight this for years and years and years to come. And with the change in political winds, we just don't see this materializing for the government the way they think it will.
And Alonzo, finally, I want to ask you about Bitcoin. With the big run that we have seen, does it have a place in your clients' portfolios? And if it doesn't, would that change if there is some sort of regulatory change?
Yeah, that's a great question. So, for us now, it's a matter of how you own digital assets and cryptocurrencies versus if you should own them or not. Obviously, we're registered with the Securities and Exchange Commission, so we're very careful and try to be very compliant. But it's time. I think we're seeing institutional investors really embrace this next wave of crypto adoption. We're seeing, obviously, the new upcoming administration really lean into it as well, and there's a lot of enthusiasm. Investors know that they have to be careful when they consider these digital assets or cryptocurrencies. We've seen those big, booms and bust cycles within crypto, and something to consider. But I think you guys have spoken to Kathy Wood, or I saw some reports that she expects the price of Bitcoin to be in the $600,000 range over the next 5 to 6, 7 years. And that's just amazing to think about. And frankly, there are some catalysts that could potentially take it there, given the fact that there's so many supply and demand dynamics behind things like Bitcoin and cryptocurrencies.
Alonzo, great having you on the show today. Thanks for your time and insight. Appreciate it.
Thank you both, as always. Thank you.
And coming up, we're going to get you the latest earnings results from Gap, as those numbers are about set to cross the wire here. Stay tuned. More market domination over time still to come.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Now let's make some money and get a lot smarter.
I've done Yahoo Finance forever. This is a spectacular spot.
Welcome to Stocks in Translation. I'm your host, Jared Blickery.
Hello, world. I'm Ross Mack.
Hi, I'm Bob Powell, and welcome to Decoding Retirement.
Welcome to Living Not So Fabulously.
Hey, 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 it's me, Tiffany the Budgetista, your favorite financial educator. Welcome to Capital Gains World for a few days and everything has changed.
From Wall Street to Main Street to the C-suite, we are your daily lifeline because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
American Superconductor, or AMSC, has been on a tear this year. The stock's up over 200%. It's not the first time the company's seen its shares surge. Its products have been in high demand before. But can the company deliver on the growth in that stock price this time around? Let's talk about it with the CEO of AMSC, Dan McGann. Dan, good to see you. Thanks for being here. So the reason I asked that question is that indeed we've seen the stock surge. The price to earnings ratio has gone up with it. What's been going on this year, and what kind of growth, underlying growth in earnings are you guys looking for?
Well, I think the operative word here is earnings. So that's something new to the company, right? So to look at that ratio is a little difficult because we're just starting to earn.
Right.
And I think there's a lot of excitement and exuberance in the company and outside the company on what's been happening. It's really the growth. We've been growing at 25, 30% here. And it looks like that we have a lot of tailwinds at our back that are going to keep moving the company in the right direction.
And Daniel, as Julie mentioned, I mean, you have been in business a long time. So I'm just interested, what's changed now in terms of these big trends we talk a lot about? And you all sit right in the middle of, power demand, the health and strength of our grid. How do you think about it?
I think that what's happened is the problems that we solve are more paramount today. So we're asking the electricity grid to do a lot of things it's just not designed to do. And where we come in is we help augment that. We're able to provide hardware and equipment to the grid to allow all these new challenges to be absorbed and to get the power to where it's needed.
And you guys will also have some new military contracts. And I bring that up also because the technology is kind of cool, that basically you make wires that help ships evade detection by mines, if I understand
That's
it
exactly
correctly.
right. Yeah.
And so talk to me about some of the contracts that you guys are getting related to that.
Yeah, we've had a series of contracts with the U.S. Navy. So this is something that's been in development for not quite a decade, but a good amount of time. A number of years ago, we started to get our first design win with the U.S. Navy on a ship that brings Marines into harm's way. We followed that up now with 5 successive contracts on that platform. We have a whole new product offering class that we're developing that's been sponsored by the U.S. Navy. But the contract you're alluding to that we just got in the summer is taking that same first technology to the Royal Canadian Navy. So that was a $75 million contract that we just closed. So we're looking to hopefully expand that business here over the coming years. The backlog certainly predicts all that. Now it's really up to make sure we can deliver on these key contracts for the company.
And then on the power side, let's talk more about that, because we talk all the time about the enormous demands that are being put on the grid and will be put on the grid. A lot is the result of AI, but other factors as well. So how's that playing through to your business? And are you guys seeing that demand? Because you guys are a relatively small player. There's a lot of players in this business.
Yeah, although we're growing, we're still a small company. Getting over $1 billion market cap's a big deal, but we're not a major player in this area. We fit in a very specialized niche that allows the grid to do some of these things it needs to do. In general, there's a lot of pressure on the grid to do more. AI is kind of the next thing that's going to push the grid and ask it to do these things that it's not quite capable of doing. So where we come in is we help to kind of connect the grid together in a better way, make it more resilient, make it more dependent, allow power to get to where it's needed and how it needs to be either utilized for an industrial concern or even for a power plant.
And you do compete, Daniel, though, with some big names, right? Big established names. I think Siemens, right? General Electric. I mean, how do you think? What are your competitive advantages there broadly?
The interesting thing that's happened over the past few years is our major competitors are all major names, just like you said. They're becoming more good customers for us. So what we're finding is some of the key technology we deliver that's truly unique, they're now buying and sourcing from us. So it used to be that very big projects, they would do the whole thing. And I think what we've been able to do is demonstrate there's parts of our technology portfolio that are necessary for the projects that they're doing.
What effect do potential tariffs have on all of this? Because, we talk a lot about it with semiconductors, but I imagine it's relevant for superconductors as well.
It's relevant, but I don't think it's fully applicable because we make the products that we sell in America, we already make in America. So we have factories in New Jersey, in New York State, in Connecticut, and Massachusetts that make products for the world. But that's all domestic content.
Do you worry about retaliatory tariffs at all from some of the places where you sell your products?
Again, not to really worry about it. We don't have an offering in China, so that's probably the main source of retaliatory. We made a decision a number of years ago to really grow through grid and to grow here at home in America. We're not at a point where that business is expanding. And then we see the ability to go globally, particularly into Europe and into the Americas in general. That's kind of our next opportunity. So I don't think the tariffs are going to encumber our business.
Gotcha. And then finally, Dan, to go back to earnings, what now does the path look like forward in terms of consistency of positive earnings?
Yeah, I think, the thing we're really happy, a couple of years ago, we just broke through getting to 30 million of revenue a quarter. Earlier this year, we broke through 40. This last quarter ending September, we broke through 50. The street has us getting to 60, hopefully in the next few quarters. So the thing that really comforts me is we have the orders on hand. We have a backlog that basically keeps us at this revenue level. We're able to continue to grow that. The business will grow. We seem well positioned to grow. There's a lot of these tailwinds, as you're talking about, that are really going to help push our business forward. There's a lot of financial leverage as we are able to bring revenue up. We think profit will be higher proportionally delivered. So we don't have to invest in a lot of fixed cost or CapEx to get at the larger opportunities that are in front of us.
All right.
Daniel, thanks so much for joining us today. Appreciate your time.
Thank you both. Appreciate it.
All right, taking a look right now at shares of Gap as its third quarter results are just now hitting the wire. And you can see this stock is moving. We're up about now more than 7% in the after hours. Let's get you those numbers. Bottom line, EPS 72 cents. That is versus an expectation of 58 cents. Revenue, $3.8 billion versus an expectation of $3.81 billion. Gross margin, it looks like 42.7%. Total comp sales now plus 1%. The estimate was more like 1.73%, Julie. But a key here, and I think this is what explains obviously the move here, they did raise their full year outlook for sales.
Yeah, so that seems to be indeed what's going on here. The CEO, Richard Dickson, is still relatively new in the role. I think he's been there now for about a year or so. And our Brian Sozzi had the chance to talk to him, and he said the holiday season's off to a strong start, and that's what gave them the confidence to raise their expectations for the year. So that kind of positivity and optimism seems to be helping things as he really tries to turn things around here for Gap. He says in the statement, he points out that net sales growing for the fourth consecutive quarter and that they did gain some market share here. So that's what's helping matters.
Yeah, and heading into this report, the stock had not done a whole lot in 2024 and was up around 4 or 5%. But listen, there were certainly bulls on the stock too who think, listen, and I think in part you were obviously not surprisingly given that performance. You would hear valuation calls that it was just too cheap for the story. But they do, mention the CEO as well, Julie, knew the job, and some of the bulls on the street do like kind of the changes, strategy, and levers he's pulling.
Did you already do the segment sales for them?
I didn't. You want to break it out?
All right, so let's do the segment sales real quick because third quarter comps for Old Navy unchanged, Gap up 3%, Banana Republic down 1%, and Athleta up 5%. So that's what we saw in the third quarter. Athleta, the smallest division among them, but doing the best there. And all of them, it looks like, showing an improvement year over year in those comp sales.
Yeah, I'm just saying, too, what they're projecting for full year gross margins also looks a bit better than what they had previously forecast, so that also helping. All right, let's take a look at what's trending after hours. Your shares of Ross Stores are jumping. The retailer reporting third quarter results, adjusted EPS beating estimates. On the top line, though, revenue came in shy of analyst expectations. The company saying results were affected by the hurricanes and unseasonable warm weather. The stock appears to be moving on the outlook. The company did raise its full year EPS guidance.
Next up, Intuit, a tax preparation software company, sliding in extended trading after it announced a first quarter miss on both earnings and revenue. Intuit did reiterate its full year guidance, but its second quarter guidance missed expectations. Its CFO said in the statement, "We're confident in delivering double-digit revenue growth and margin expansion this year."
Time now for To Watch Friday, November 22nd. Taking a look at the economy. We're going to be getting new monthly Purchasing Managers Index survey for November. Economists forecasting services PMI to hold steady at 55 and manufacturing PMI to tick up to 48.9. The new data providing more insight into the activity of private businesses in the services and manufacturing sectors.
And sticking with the economy, the final reading on consumer sentiment coming out in the morning, that number expected to go up to 73.9 compared to the initial reading for November. That'll give us more insight into the state of the consumer ahead of a critical holiday season for retailers.
And moving over to the Fed, we're going to be getting some commentary from Fed Governor Michelle Bowman in the evening. This is coming after comments from Bowman on Wednesday calling for a cautious approach to any further interest rate cuts. Bowman had cast the lone dissenting vote, remember, on the Fed's 50 basis point rate cut back in September.
That'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned.
It's a jam-packed hour focusing on the biggest movers and shakers on Wall Street.
This is Market Domination, and here, every day is game day.
We have 1 hour left until the market close.
It's game time for investors to make their final plays.
The clock is ticking, and we've got you covered with our quarter-by-quarter playbook.
We're bringing you in on all the market action,
with step-by-step analysis of our biggest trending tickers.
And expert insight into the day's biggest headlines.
We'll bring you the closing bell and get you to the finish line.
This is Market Domination.
Tune in daily from 3 to 4 p.m. Eastern.
Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we're going to be breaking down the trends of today that'll move stocks tomorrow. There was a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. Optimism returning to Wall Street as the Dow posts back-to-back gains, but I'll be speaking to one strategist who says the market rally is tired. We're going to dive into the trading day takeaways and what could be the next catalyst for investors. Plus, Gap shares surging after posting third quarter earnings. We're going to get analyst reaction to the print and what the numbers say about CEO Richard Dixon's turnaround strategy. And Bitcoin racing toward $100,000. We're looking at the price action in crypto as Gary Gensler announces he will be stepping down as SEC chair in January. Well, Gap posting earnings beat for the third quarter and lifting its full-year outlook. The retailer also seeing its flagship brand post 4 consecutive quarters of positive comparable sales. For more on the results, let's get right now to Morningstar equity analyst David Schwartz joins us now to discuss. David, it's good to see you. So, listen, Gap reports the stock is surging here in the after hours. David, what do you make of the report? Is that surge justified in your opinion?
Yeah, it looks like it is. The company reported 72 cents in EPS. I was at 56 cents. So it's quite a large beat on the bottom line. The top line sales were pretty much as I expected. Nothing spectacular, certainly. You do hope that at some point Gap will be able to report stronger comps than what it's had recently. But I think the margins were quite good in the quarter. And this does show that with slightly better sales, Gap's margins can be quite improved.
When you look at their family of brands, David, I'm just curious to say, what do you think their kind of competitive advantages are? What are their moats?
Well, the strongest brand that Gap has is certainly Old Navy. Old Navy generates most of Gap's sales and profit, and it does have an advantage in that it has low price merchandise. It does appeal to wide demographic groups, both adults and children. I think it does really fit with the way that people shop today. So Gap really leads with Old Navy. Athleta also is a pretty strong brand in a very strong category in women's athleisure. It's not quite as strong as some others like Lululemon, but there is a market for that, and Gap has built Athleta into a real competitor in that space.
There were some, I know, notes, previews, David, from colleagues of yours on the street who were talking about warmer weather and an impact here. You see evidence of that in the print anywhere?
No, not really. I don't think there was too much impact on Gap. There might have been some in the latter part of the quarter in September and October, but it doesn't seem like it had any measurable impact on sales.
What about CEO Richard Dixon, Dave? I'm curious, get your thoughts there. What do you make of him, the job he's done, his strategy for the company?
Dixon certainly has been a strong choice for CEO. I don't think it was a position that many people wanted, but I think given the circumstances, he was a great hire, and certainly since he's come back, to this industry. From Mattel, there's been a lot of interest in what he's doing, and it certainly created a lot of interest in Gap and has given people confidence that there is a future for this company. And at times in the past, people really doubted that there was.
Dave, heading into this print, the stock was up about 5% in 2024. It's up about 11% right now in the after hours. How does valuation look for this one?
I think the valuation is still, not too expensive. My fair value estimate on it is $26.50. So right now, with the stock moving today, it is getting close to that. But so I don't think it's certainly as cheap as it once was. When it was in the single digits, I thought it was extremely cheap. Now I think it's getting close to probably fair value. And the company will probably need to report better numbers than these in the future to really justify a higher valuation. This is still a company that has very minimal sales growth, and so that does probably impact the valuation here.
Final question, Dave. Trump is returning to the White House. That means tariffs are front and center. What do you think that can mean for a name like Gap?
For the most part, the companies that I cover, including Gap, have not had a big impact from tariffs. Gap, like other companies that are multinational and large, have multiple sources of production. A lot of production can be shifted to other countries, and it has been shifting in this industry outside of China to other countries in Southeast Asia for years. If there are tariffs that are placed on all countries everywhere, and there's retaliation from those countries, then certainly that would affect Gap and it would affect the entire industry. However, I don't think that Gap is at extreme risk of that at this point.
David, always appreciate your instant reaction and analysis. Thank you. Stocks closing higher, led by the Dow. Investors digesting Nvidia's earnings and pressure on Alphabet from the DOJ. Yahoo Finance's Josh Schaefer joins us now with more on the trading day takeaways. Josh.
Hey, Josh. So you and I talk a lot about this theme of the stock market rally broadening out, going away from the Magnificent Seven, those big tech companies we talk about all the time, and into the other 493. We saw a lot of that action today, so I want to just dig into what we saw. So Alphabet, of course, digging lower today after the DOJ is calling for that breakup, potentially targeting Google Chrome's browser there. You see the shares there off about 5%. But what we're looking at here is the Nasdaq 100. You don't see this picture a lot, Josh. A lot of red among the mega caps. A lot of green on our screen here, right? And then even when I flip over to the sector action, so when we're talking mega caps, we're usually talking tech, right? XLK was up over 1% today. 10 of your 11 sectors in the green. Of course, comm services, the one sector down. What's in comm services? Alphabet really going to weigh on that sector. But what stuck out to me is I really felt like today was a good example of that rotation out of the Mag 7 into some of the other cyclical areas of the market, like a financials or industrials.
Talking about and
this is what we've been sort of talking about for months now, and every now and then in certain days you start to see a good picture of that. This is what it feels like people are talking about you might see more of in 2025.
All right, Schaefer, number two.
Number two, Josh, we're going to move away from the stocks and get into something more exciting because it just keeps going up. Bitcoin. So I want to take a look at simply just the price action we've seen over the last 5 days, really. So we'll flip over to our crypto screen here. Bitcoin, I think, pressed above 99,000 today, Josh. It was awfully close. You can see it there. So we're coming really close into 100,000. Take a look at the 5-day. It's been shooting up. Of course, the big news today for Bitcoin, it was already moving up, but SEC Chair Gary Gensler saying that he will step down on Inauguration Day in January 2025. Seems like crypto bulls think that's a good sign overall for the industry, maybe someone that's more pro-crypto coming into the SEC.
Yeah, I remember Trump on the campaign trail was obviously positioned himself as a crypto fan and made a series of pledges. I mean, I also think he didn't, he made his views known on Gensler very clear, I think. And to your point, Josh, we had any number of crypto leaders on the show have come on, and they did think of Gensler as an adversary. He spent a lot of his time fighting with big names. You think of Coinbase and others. Yeah.
Right, and the interesting thing with that too, Josh, is we've talked a lot about what Trump said on the campaign trail, which is what is actually going to happen. Gensler stepping down is a check in the box for Trump on something he said is going to happen that will now actually happen. And
even maybe beyond that, also maybe a new crypto czar being discussed.
Right.
So who knows?
But the interesting part of this crypto trade today, Josh, crypto stocks not really moving with Bitcoin today. So MicroStrategy was one that we have been watching. MicroStrategy's in blue here, Bitcoin's in white. We scaled it a little bit so you can see how the moves have been similar, right? Bitcoin up, MicroStrategy up. Look at what we had today. So you had Citron Research coming out saying they're now short MicroStrategy shares. They had been buying MicroStrategy, which owns a lot of Bitcoin, as a way to access Bitcoin. They said simply when you take a look at the run up in MicroStrategy, which had been up over 600% year to date, it's up a lot more than Bitcoin. And maybe at some point, the move in MicroStrategy doesn't make as much sense when you start to zoom out and just look at how far it's run up. And you even saw a similar thing, Josh, beyond MicroStrategy. Coinbase also down today, and a couple of those stocks that have been moving with Bitcoin and moved significantly don't seem to be catching the same amount of appetite right now.
Also, when it's Citron, I mean, that's a well-known name, right? That's going to make a headline.
When they come out with a short, you usually see that stock move, that's for sure.
Thank you, Joshua. All right, moving on. Markets closed the day on a tear here, clawing back some of the losses we've seen this week, but with Bitcoin nearing 100,000 and Nvidia delivering yet another earnings beat, how much room is left for markets to run, and where will the next catalyst come from? Joining us now is Kenny Polcari, partner and chief market strategist, Slatestone Wealth. Kenny, always good to see you. So you said something, Kenny, that caught my eye because you've been trading a long time, Kenny. So when you write something, I pay attention. And when you look at the market right now, Kenny, look at the SPX. You said it looks a bit tired, Kenny. How come? What did you mean by that?
Listen, we've had this dramatic move in the market all year, but most recently since the election. And so I think, post the election, there was all that excitement that the election was over, it was done, it was behind us, it wasn't getting dragged out, it wasn't going to go to the court, there weren't going to be lots of challenges to it. And so there was that euphoria, I think, that first hit. But then people have to start to look back for a minute and think, okay, what happens next? What do we need to focus on? Let's think about what the Fed's doing. Let's look at the economy. Yes, it's great the election's over, but then we have to consider, cabinet appointments and what's coming next. And so I think the market, we ran right back up to almost 6,000 again. I think the market just feels a little tired. I'm hoping it pulls back. We haven't gotten it yet, but I'm hoping we see us fill that gap that it created on November 6th when it opened up 88 points from where it closed on Friday. There's a big gap there in the S&P, which I would like to think needs to be filled. So I'd like to see the market come back and fill that gap.
And so the levels you'd be watching on the SPX, the S&P 500, they'd be what, Kenny?
So they're the trend line, which is 50, I think it's 57.80 or 57.92, and then 6,000. So we're kissing 6,000 right now, so we're at the upper range of that. But I would expect us to come back and want to test the trend line, which again would also then fill that gap. I think it needs to happen. I actually think investors, long-term investors, would love to see some digestion and for the market to pull back, right? You don't want to keep seeing it go straight up, because as you and I both know, trees don't go straight to the sky. So at some point, there has to be some digestion.
What's the next possible catalyst for the market, Kenny? What would you be looking for? Is it that Fed meeting next month?
No, I got news for you. I don't think the Fed meeting next month, I think Nvidia stole all the excitement. I don't think anyone's really paying attention. I think Fed heads over the last week and a half, including J.J. Powell, has done a great job at trying to get the market prepared for no rate cut in December, which I agree with. I don't think they should cut. And I think that's what they're preparing the market for. So I don't think that's going to be a big market moving event. I think they're going to talk about it enough over the next couple of weeks that they get everyone comfortable with, we're okay where we're at, no rate cut, we're going to sit and watch it. So I don't think that's going to be the catalyst. I think the catalyst from a negative perspective is going to be a geopolitical event. And, we could talk about what's happening between Russia and Ukraine. We can talk about still the ongoing conflict in Israel and Gaza and Hezbollah and Iran and all that. But I think it's going to be a geopolitical event that causes the negative catalyst. On the positive side, if we get through that and that doesn't happen, on the positive side, people are starting to look clearly ahead to 2025. Look what happened today. The Dow rallied massively, right? So that tells you that the rally continues to broaden out and that people are very excited and they're positive, they're optimistic about 2025.
It's interesting, they're excited, Kenny, but it's so many cross currents coming at you at once with this administration. I'd love to get your thoughts on that because you just have a ton to consider. I mean, you have pro-growth policies we can talk about and tax cuts and deregulation. On the other side, you have to consider tariffs, immigration. How is an investor supposed to kind of look through that and navigate that, Kenny?
So I think it depends on who we're talking about. Are we talking about a long-term investor, somebody that's building a portfolio that wants it to work for them? Because that's very different than somebody who wants to day trade. A day trader wants to listen to the noise. They want it to be noisy all the time so that there's lots of volatility. But as a long-term investor, you need to be able to take some of that noise and just push it aside and focus on really what prices stocks in the long term. And what prices stocks in the long term is the economies, is economic policies, margins, profits, revenues. That's what really prices stocks. When you get actions, when you get movement in stocks, negative movements because of geopolitical events or election events, those are short-term chaotic events that create long-term opportunity for the long-term investor. So I continue to believe, and I am a long-term investor, and my clients are all long-term investors, is that you got to kind of eliminate a lot of that noise. You got to take it into account what's happening, but you have to build just a solid portfolio with some of the big mega cap names in the industries that you want to be represented.
Finally, Kenny, listen, long-time trader like yourself, I got to ask you about the moves you're seeing in Bitcoin, approaching 100,000. Obviously, hope is riding high on Trump returning to the White House, seen as a crypto ally. And it's not just Trump. I mean, important to remember, he has surrounded himself with that. I mean, Howard Lutnick, crypto guy, RFK Jr., crypto guy. Right. What do you make of the moves we're seeing, Kenny?
Right. Listen, I think it's great. We just saw Gensler's going to retire in January. He should have, because if he didn't retire, I guess he was going to get tossed out anyway. But I think all this stuff around crypto is very positive, because I do think crypto and blockchain is going to play a real role in the U.S. economy and the global economy going forward. So I am excited about it. But again, I also think it gets stretched a little bit. Again, it's that relief, it's that excitement, that euphoria about the election, about the regulation, about the support that crypto will have in the new administration. But I think you don't get yourself all caught up in euphoria. Still remain focused on where you own it, when you buy it, buying it on pullbacks, that kind of thing. Look, I was actually surprised today, and it might happen tomorrow because we're going into the weekend. I thought we were really going to kiss 100,000 today, just because we're just within $2,000 away from it. And that can happen very quickly, right? We could see that happen really overnight. I suspect maybe it's going to happen tomorrow. And if it doesn't, it's probably going to happen next week, just because it's a big round number. I think they're going to make it happen just because it happens, and then we might see Bitcoin pull back a little bit. But I don't think it's going to pull back significantly. But I think you have to don't get caught up in the euphoria.
Kenny, always great to see you, buddy.
Always a pleasure to see you. Thanks for having me.
Coming up this week on the Yahoo Finance Sports Report, host Joe Pompliano takes a deeper look into the latest news coming out of the NCAA with Yahoo Sports senior college football reporter Ross Dellinger. You can scan the QR code below to check out the latest episodes, and be sure to tune in to the Yahoo Finance Sports Report every Thursday at 5 p.m. on the Yahoo Finance homepage or wherever you get your podcasts. Here's a quick look at this week's episode.
For the last 3 years, around 80% of the compensation athletes are getting are coming from boosters. Those numbers are provided by some platforms that work in the space, and I think they're pretty accurate. And so now there's a settlement, right, of an antitrust case. And the settlement will provide the opportunity for schools to pay athletes directly instead of the money coming from boosters. So the idea is to move the money coming from boosters under the school umbrella operation and let them pay share revenue that they get from TV and ticket sales and sponsorships to athlete. They get a cut of the revenue. The only way for that to happen is if the settlement does get approved. It's been preliminarily approved, but there's an objection process now. And I would guess there are going to be a lot of objections to the settlement coming in January and into February. And there'll be hearings in March, and then a final approval hearing in April. If in April it's approved, right, schools starting July 1 will be able to directly pay players and share revenue with players.
Welcome to Yahoo Finance Sports Report, a unique look at sports business brought to you by Yahoo Finance and Yahoo Sports. I'm your host, Joe Pompliano, and I'll be breaking down the financial side of the game for your financial gain. We'll go beyond the headlines, analyzing all the latest sports news, the teams, the trades, and billion-dollar deals, so you and your portfolio will win big. Catch Yahoo Finance Sports Report on Thursdays on all your favorite podcasts and streaming platforms.
Formula One is gearing up for the Las Vegas Grand Prix, marking the second running on the Las Vegas Strip. And here with more on what's changed for the sport since last year's race, we have Yahoo Finance's very own Praz Submarinian. Praz.
Yes, Josh, the Las Vegas Grand Prix is here with the action starting Thursday night with practice and the actual race on Saturday under the neon lights of the iconic Strip. Now, while experts predict this year's race will pull in a bit less than the $500 million or so in revenue it did for F1 and a bit below the $1.5 billion in economic impact from last year's race, it will still be a big one. The 300,000 or so attendees, tend to spend 4 times more than the regular Vegas visitors. So I spoke to Oliver Oakes, team principal at Alpine F1, about the Vegas race and how F1 owner Liberty Media has made F1 the juggernaut that it is.
I mean, they've done an amazing sort of job bringing the sport to everybody. You know, I think everyone talks about Drive to Survive and the effect that's had, but actually I think it goes much more wider than that. I mean, you can see now every event in F1 is a free 4-day weekend, whether that's sprint races thrown in, whether that's the concerts on event. It's fantastic, and you know they've been the ones driving this growth. It's clear to see.
You know, Alpine itself is an interesting team, majority owned by Renault and touting celebrity owners like Ryan Reynolds, Patrick Mahomes, and even golfer Rory McIlroy. But its future has sort of been an open question. I asked Oliver to comment on whether the team was for sale or not.
But I think actually people can really see now that, you know, the backing from Luca, from the group, the sort of direction we've took with going out to get the best engine to put the team really front foot forward and climbing back up the grid. So I think it's exciting times for the team, and you know, for the first time I think there's some real leadership there as well and real support. So it's looking good for the future.
So while he didn't deny it, he did mention Luca Di Meo, who's Renault's CEO, is still backing the team.
How many teams are we talking about here in total?
So there's 11 teams and 22 cars, so that's basically the entire field. And with F1, you can't really just, I'm going to bring a team to the league or whatever. You have to buy an existing team. You can't just hop in. The teams have to vote if they want to bring you in. They're usually kind of hesitant to do so because they want to keep all the money themselves. So buying a team is the way in, and that's sort of what we've been hearing from other teams. Like there's a team called Haas, also that American team that might be for sale. Who knows? But there's rumors that GM was knocking around on some doors for
GM, really?
Because they want to get into F1 with the Cadillac brand.
I thought you were going to say like Bezos.
I mean, there's all of your run-of-the-mill billionaires that want a nice marquee thing to kind of, do on the weekends and park their boat on the marina and watch the races. So, I could see you and I doing that.
I know I would, yeah. Praz, thank you, buddy. Appreciate it. Stick around. More Ask for a Trend right on the other side. our chart of the day, we're looking at moves in the Bitcoin market between Korean exchanges and other crypto exchanges. Yahoo Finance Julie Hyman joins me now with a closer look. Julie.
Hey, Josh. Now, as the price of Bitcoin approaches $100,000, you might see crypto pros and amateurs, for that matter, looking for signs of froth in the market. Has this run too far? Will there end up being a pullback? One of those folks who's looking into this is Sean Farrell over at Fundstrat. He's the head of digital asset strategy there. He recently was out with a note, and he spoke to us a little bit earlier about what he calls the kimchi premium, or not just he calls it, that's what folks call it, which is the difference in Bitcoin traded on South Korean exchanges and U.S. exchanges. Here's what he told us about that differential.
There are certain capital controls in South Korea that do not allow for differences in price on Korean exchanges to be arbed away, and therefore you can get severe deviations, especially during speculative periods of any market cycle, where the price of Bitcoin on Korean exchanges is, sometimes 5, 10, 15, up to 50% higher than it is, say, on Coinbase or Binance.
And he says when that happens, because Bitcoin is a global market, it can be a sign of speculative froth, but it's not what we're seeing right now. So here is a chart of the so-called kimchi premium. That is the orange line here. You've got the price of Bitcoin in blue, of course, is going higher and higher. And then you just have the 30-day moving average of that kimchi premium. Now, you've seen at other points when it's sort of spiked here, it's presaged or at least happened at the same time as a pullback in Bitcoin. You've had a few spikes where you've seen then a pullback. But right now, as he said, the differential between the two is just about zero. So he, at least in this measure, is not seeing it as a sign of speculative froth. And as he wrote in that note as well, Josh, what I thought was interesting, he said, we're seeing again a time for Bitcoin where regular people are asking about it. Family members are saying, did I miss it again? Did I miss it at this point? Should I get into Bitcoin? He says sometimes that can be a sign of speculative froth as well, but he is not yet seeing it this time. And as he told us, his target for Bitcoin in the short to medium term, 115 to 120.
And we asked him, Julia, that big move since Election Day, right? We asked him any line of sight there about who's getting in. Is it individual investors? Is it institutions? Is it RIAs? And he said everybody.
Everybody.
And frankly, is joining the post-election party. Yeah.
Yeah, and I thought it was really interesting, too, when I talked to Mike Novogratz of Galaxy Digital yesterday. He said something similar, but he also said what could then provide the next leg up is if you see, for example, sovereign wealth funds start to get into Bitcoin in a more decided fashion. That is what he's watching for to potentially trigger the next leg up.
All right. Thank you, Julie. And that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.